Good evening and welcome to my recap for the S&P 500 and trade plan for next week. As you can see, there's not a whole lot of new notes on here. I haven't really done too much with the SPY. I have been intraday trading some SPX calls and doing extremely well. Looking to take a swing here in the S&P 500 with SPY calls actually on a retest of the 50 SMA and 8 EMA right in this region here, 260, 262 area. So the note that I have on here is to take, depending on where the price action reaches down into in the setup, anywhere from 260, 262 calls for next month into February. May even look to go out into March because I think if price action does come up here and settle in, go sideways, consolidate at this level, and then start to make a move higher, we're going to go much higher. So that would actually confirm this V bottom, which a lot of pundits are saying no, there's never been a V bottom, they all fail. After a breakdown such as this could be a false breakdown. There's a huge amount of volume that came in down here. Calls really started outnumbering puts way down here, and a lot of money went into the market. If you were doing any kind of fundamental research on some names, a lot of companies went to trading below book value. Dividends got to be looking very juicy. A lot of names went over 7, 8, 9% on the dividends. It's going to more than make up for some sort of interest rates going forward. And it looks like money's being put to use. I mean, anytime you have a bottom like this, there's a lot of money being put in the market. Now, my opinion is with the readily available information at everybody's disposal, everyone knows to buy companies when they're cheap. And most of the fundamental books will explain being cheap as trading below what that company is worth. If you want to look at it as buying a dollar for 50 cents and then being able to go and sell it tomorrow for a full dollar, it's essentially the way it works. Companies were cheap. A lot of participants saw that. A lot of participants like those dividend yields, and this put in a very, very strong, solid bottom here. Even though this was on the half day pre-Christmas, Christmas Eve, that marked the very bottom, still a tremendous amount of volume that week, and I'm looking at it as a potential type of capitulation. Now we could come down here and test this bottom, which is perfectly fine. Now that we have a point of reference, if price action does come down through here and start rolling over, the most ideal area is going to be in this 232, 240-ish area, in my opinion, and there's going to be a lot of buy orders there. It may rip through it below it and do a dip and rip. It'll dip below and just pop and rip all the way back up higher. So that's my opinion on that if we do get a retest. What I'm also looking at here on the monthly chart is a potential false breakdown of several key levels, the 2018 lows, as well as re-entering back into this 2018 channel. Anytime price action does this on a lower time frame, in my experience anyways, this price action will actually complete the pattern and possibly run all the way back up here to the 300 level. Now I'm not saying it's going to be a straight shot, but I'm saying it's at least possible. And all the bears that think the market's overvalued, needs to crash, needs to come down to, I don't even know where they want to think it comes down to, 150, 100, just makes absolutely no sense. This is a vehicle, as I've said numerous times, that's designed to go up and appreciate. That's why there are so many retirement accounts, pensions, and everything invested in the overall U.S. market, which is through the SPY. A lot of other ETFs, various funds do the same thing, but they're all designed to go up. So it makes no sense to me to bet against the overall market. So for that reason, I'm still going to stay bullish. I'm still going to continue to look at trading this from the long side and try and capitalize on the move into the end of this year. Um, if we do get a pullback and start to have a double bottom down here, I will definitely be loading up in 2020 calls and just sitting and waiting. So for now, that's going to be my analysis and trade plan for Tuesday. Actually, I didn't touch on this note up here. If we break above this little flag area, just like in Apple, I will take 267 calls for 2 weeks in the future. Because it's a breakout trade, I don't want to go I don't want to go into the trade with the plan of holding it for several days or nights. Down here on a pullback, I'm much happier with holding something at support than a breakout, because if this breaks out and fails, it's coming all the way back down here, and that's going to be a lot of risk right there. So I want this to break out and move immediately up to this 270 level, which I actually have this line right here. Is just the pattern that had played out previously, or actually was created on the last drop off of 280 over here. So this is a trend line worth noting. At least there's going to be some supply up there. Anywhere between 270 and 273 right here is going to be some supply. So If price action breaks above here with strength on Tuesday, I expect to take some profit off up here to on 270. If price action breaks above on weak volume, starts to roll back through, I'll immediately get out and wait for the support play. So I got 2 trades set up here for the S&P 500 on Tuesday, and a couple I'm looking for on Apple. If you have any questions or comments, please feel free to leave them down below. Have a good weekend and good luck.